Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, June 18th, 2023. It's a little bit after 10 a.m. here on the East Coast. I'm Wayne, my partner Ryan's probably in the midst of getting together our market outlook / overview for the week. Let's flash a few critical things here if we can, and then we can get into the sector situation. I'm going to try to make it brief. Friends, try to make it brief here. Here's our trusty disclaimer. Here is our intellectual property rights notice. And here is what I covered in macro measure. In case you don't watch that, you can just get a sense on things. Hopefully some of these notes and whatever that I use to try to keep myself on the straight and narrow during my discussion of things are translate. Hopefully they translate for you. But anyway, that you have an idea what we talked about there. So on that, let's shut this down and let's get into a couple other things. So I did cover all this in macro measure. All I want to really mention here is that this kind of start out the big picture, then go down to the sectors. This is the main thing. Now, granted, this is not a perfect, certainly not a perfect indicator. We've talked about it every time, but right now, you're just extremely overbought, and every single component in here, except for volatility, is in extreme greed, the extreme greed range. So just keep that in mind. Like that's really the backdrop to everything this week. There's a bunch of other things, of course, we talked about in macro measure and all the other tabs, but that's not what we do here in sector situation. And again, sticking with, let's start out with the big picture. I wanted to just note, I put my Bollinger Bands at 3 standard deviations to the upside just to see where we are. And on some things, we're already there. Some things like Qs were a little bit away from there. But just starting out with a sector, which will just be the technology sector. And there's a lot of overlap here, but that's also getting up there, right? So if you believe at all in the Bollinger Band approach or think it's worth keeping an eye on, that kind of a thing. I do. I don't really trade off of it, but I like to just use it for framing where things are. But things are extreme, right? We showed that in macro measure how other than when they dropped somewhere between 7 to 11 trillion by many estimates, there's their range anyway, into the economy to support the economy post-COVID, let's say COVID crash, suddenly then these trillions and trillions come in, and the market became, of course, extremely overbought in the wake of that many months later. That is the only other time where things we can find in the last 10 years that things became this stretched from their 200 SMA in several areas. We'll show that in this sector right here. And that is it right there. So let me get you what I'm talking about. Let me get you a better view of what I'm talking about here and make sure we're on 10 years. So there's a lot of time here. This is no small thing, in other words, that happened here. And I'm not sure if it holds up in XLK as well as it does in QQQ, but I think it may. Let's see. I think it's going to be pretty similar. So this goes back all the way to, you can see that the red dots are not anywhere near back in 13, 14, back in this range, are nowhere near where they are today, right? Hopefully you can see that. So if I mouse over this and say, where did we get to this week? Again, only in that post-COVID response mania was it ever higher. And this is extremely rare. I mean, I don't know when you can compare this to, like I said, it could be World War II, maybe, where there was that much spending going on by the government to support the war efforts. So maybe there was that much support then. I don't know. I'm not a market historian that way, but it's just a guess. But anyway, that is an extraordinary time. I don't think it's something you see very often. In my 3 decades, I've never seen anything that's, roughly half the size of the economy in terms of some kind of support or stimulus. So there you have it. And now, right, you're the only time that you've been higher than where we are now is then. So I think this is one of those times where it might not be immediate, but it's in my mind, it's got a very good chance of being a short-term top, right? Where you could trade this, or at least be smart about the longs you've been holding, which I think a lot of people were on Friday, take profits, switch, again, I can't talk about tax implications, but take profits, switch into slightly out of the money calls. And if it keeps running, you're still happy. If it backs off, you didn't stay in equity and give a lot back, that kind of a thing. But that's a whole nother discussion. But that's where XLK got to, right? So it could be a double top, maybe, right, relative to here. I think the biggest problem we have right now is that everyone knows this is super overbought. All these things are super overbought. So let's get a better look at things through our sector right here. This is our, nope, that is not it. Sector view should be here. There it is. So you can see that these are the daily charts for these 12 sectors. We usually hit this at the start or a little ways in. Here we are a little ways in, but you're at 73 on XLK, the one we just looked at on your daily RSI, the other XLC. So we've got other things bubbling up into overbought. Discretionary, which we mentioned lately as a place to maybe go to that could start to go, that has gotten haywire. That's 77, right? That just shows you how quickly they improved that. XLI, very close to 70, right? Only because of Friday's profit taking did it not probably close at 70. So you've got transports also were above 70, but closed above, just barely above 70. So transports, discretionary, industrials, the technology and communications all officially overbought. Now, other readings are not very good either. In other words, like if I look at the weekly chart on XLK, it's worse. The weekly chart has a higher reading on the RSI than the daily. So when you start doubling up on daily and weekly, both being really overbought, to me, in the stretch we just saw from the 200-day, this thing has gotten ahead of itself. That was really the sleeper scenario we've been talking about for most of this year, on and off, in cocktail hour, in webinars, in Rebel Pit, especially in the weekend videos, but mainly in macro measure weekend video. So we're there, right? That's kind of like possible now that we had that melt up after we got through 432 and the spiders. And I'll just bring this up to show that. So this was the idea, is that if we did work our way through 432, there'd be this sort of capitulation that would start to occur, short covering, longs finally adding more, you name it. And once you got through that 432, which they did on that day, then they really never let it go until the Friday profit taking. So that was the first part of the sleeper scenario. The second part of the sleeper scenario is that it turns out that this was very premature and that bulls were front running or pricing in far too optimistic of a scenario, basically pricing things to perfection, as is often said, and that you're going to work your way back down. Now, the first place I would expect it to work its way back down towards would be about 432-ish on SPY. The next place I think is going to be near all these highs, which are really about 430. And then you've got all these SMAs coming in. You've got trend line support will come in. So there could be a lot of support. And I don't know if it becomes apparent even if we do back off, which is not a guarantee, but I don't know if it becomes apparent to everyone that, hey, this will be in retrospect a bad place. They might just keep going for all we know, right? We don't want to get ahead of ourselves, but that's the idea. I referenced it, so I wanted to cover it. So with respect to the sectors, which I guess we figured out are down here, no, I give them a chance to guess. I'll guess wrong, at least 80% of the time, it seems like. But this has gotten crazy, right? Short-term crazy in these things. Let's see if I can pull another one up for us, just to give everyone an idea on some of these really overbought sectors, and just to show where they've gotten to. That's not going to help me. Come on, XLI. Let's see where XLI is on the weekly. So XLI on the weekly is still waiting for Thinkorswim. It's in the 60s. So it was in the low 60s. So the 4 hour on that one is about 73. So again, these are, I think a lot of these that have been the leaders are definitely overbought. And I would say that these are due for a breather, but I don't think it's completely, you could say it's over completely yet. right? So that's where we're at. We're in 73 on the XTN, but it's only in the low 60s on the weekly RSI. Another one that's been, very strong is XLC. And I think it's going to be a similar situation. This is a little bit higher. It's in the on the weekly mid 60s RSI, and in the mid 60s as well on the 4-hour. So they all have a little bit more room in that sense. They're not extraordinarily overbought in every case, but yeah, things are not. I think things are not ideal for going long in a big way here, but you just don't want to fight it too soon. 73 on the 4-hour, and then in the lower 60s here on XTN. So it's not, remember, the other side of this coin is that everyone knows that we just had this amazing burst and people could be lured into shorting it. And I could be part of that, but you have to, you could be, and I'm not a big counter trend player, but I'm tempted for a lot of reasons to do something here. Second half of June, some profit taking in front of things that ran too far too fast, really extreme readings, and then other tendencies and things like that. So it is what it is. But if you're thinking, well, what hasn't ran? We had someone say, well, what's the next sector? Well, despite it being hard to believe, right, we can't rule anything out. Like even the last, I think 8 months should prove to everyone that even if things aren't wonderful, remember in the last 6 months since the October lows at the high, I think we had rallied somewhere near 45% in the QQQ in 8 months, roughly 8 months of time. So that ought to give you an idea about what these people are capable of doing, right? And there's no rule that says they can't do even more. But that's in 8 months, that's an extraordinary year, let alone an extraordinary 2/3 of 1 year. But that's where we are. Now, XLE, this has been a problematic sector. We had some great trades in this way back when. It seems like forever ago. This has been tough to trade, I think, this year. And so we've tried a couple things in UOA. A couple of them worked out here and there. Some didn't fire. Some got short circuited. Probably overall still pretty good, but overall not as fun as other areas like technology. So, right, it's just not there yet. But if you're thinking, okay, well, what if they back off some of these other sectors and they start rotating into other things? Well, you probably have to look to energy. You probably have to look there. You probably have to look to real estate if you can stomach it. Personally, I find it hard to stomach that, but wouldn't rule it out as a short-term trade candidate, right? Because we know, again, we know what's possible, right? We know what's possible. Think about what just happened here in the last couple of weeks and how they broadened this rally out, to me, in a very forced, unnatural way. It just seems like a panic buy to me, more so than really legitimate long-term positioning because they want to. But regardless, they've jammed things up so dramatically. Again, ahead of themselves, in my opinion. Should be a pause or pullback, in my opinion. That's what I'm expecting this week or the next couple of weeks. But I don't know if you just instantly get the cratering. You just never know. Maybe you do get a cratering, for all I know. I just don't know, given how all of us see that. I don't know if you're going to get that. But this is dramatic stuff. You don't really see this kind of start out on a certain slope that you move up. That slope intensifies, right? Or it lifts, increases, and then it does it again, then does it again. So this is getting absurd here in XLK. There's no way around that, but you don't want to pick a fight too early with a steamroller, and you really want to wait till that turns around. But I can see why people would be, I mean, myself included, why people would be interested here. So mostly everything else has gone that way. Now, XLU, this can be looked at defensively as well. So can the XLP. Those did not do as well. So it's definitely been more of a case, as we've been saying now for the last couple of weeks, it's been more of a case of risk back on. But remember, these are ones that could hold up a little better, maybe, right, if people really do shift their focus back to risk off. On the flip side, strong sectors could hold up better than we expect if they're still really planning to be more risk on and just waiting for that breather or pullback to occur. So again, another reasons why things aren't that easy. It's not always as easy as it seems. XLF would be another area, right, that you could say, well, maybe they start coming for this. And this has really been my experience most of the time. If they sort of put together a churn where they don't really give a lot back right away, they could, and people start seeing that as healthy. Well, hey, we're holding most, the way that it would sort of go would be this: hey, we're holding most of our gains, and that's a good sign. And that means this rally's probably not done. That would be, and that, again, it doesn't take a lot for the bullish players to talk themselves into that kind of a mindset. So they might say, again, we had a lot of UOA that kind of proves this too. And I see it every time we have this kind of a big rally unfold, and then things are left behind. Energy's been left behind. XLF's been left behind. Real estate's been left behind. Healthcare to a degree has been left behind. The utilities are, again, more defensive, and probably a little bit on XLP has been left behind. But to each his her own, right? You've got it's going to look different to every Tom, Dick, Harry, Jane, Jill, etc. So you've got to decide what you think makes sense, or maybe the things you think make sense. I don't think this makes sense, but frankly, if they start to come after real estate ETFs or real estate companies and it looks bullish technically, and we see that kind of significant paper hitting, I would still take the trade, even though I don't think real estate, to me, real estate has a lot of risk to the downside, but that doesn't really matter, right? In the short run, you could still trade it over the course of a few days to a few weeks and do pretty well with it. But if they do kind of keep things churning, they might come in for those sectors that have not ran. And I think it just goes something like that. Well, hey, what hasn't ran out there? What can we lay our hands on? And I think that's what can happen. We saw that. I can't think of all the paper, but we started seeing industrial names a couple of weeks ago, and then it just kept hitting, where we had, Deere eventually hit for one name in there. We had a lot of basic material ideas that we put in, like FCX, Valet. There was maybe a couple of the uranium names, things like that came in. Can't recall all of them, but you get the idea, and so if they start coming for those, I'll be more than, if the market still is holding up, I'd be more than happy to say maybe there is a little bit of a catch-up opportunity in there. So that's what I would do with these sectors this week, is to say, look, this is it's probably not the second bottom of the second inning in this XLK move. You're probably a lot closer to the bottom of the ninth, but are you quite there, right? Can you really say it is the bottom of the ninth yet? Can you say that, it's even the top of the eighth, whatever? That would be great, because you're still on watch. I think it's something like that, right? Where you're in the seventh or eighth inning in some of these things, and you just haven't seen the rollover and that loss of momentum, that reversal of momentum. And remember, they can do this in many ways, right? So if I blow this up a little bit, I'll just kind of use my pencil. You have the big run. You could have a mild pullback, another rally attempt that fails, double top, right? Ideal double top, slightly exceeds, kind of like a false breakout double top. And then you could have a lower high that gets put in and fails there. Or you could have an immediate break, right? Where suddenly some big driver comes out news-wise and things start getting rocked. Those are just some of the scenarios that come to mind, but you just don't have it yet. You have to be careful when everyone knows something's a short. Sometimes they do pull the rug, and you get that great, like, wow, that thing was a short, I shorted it and it's got smoked. That's awesome. They, for all I know, they do that to lure people in all the other times, right? You were right this time. Keep coming back to the table, getting too aggressive too soon. But look, the truth is there weren't great closes on Friday. I just think that's natural. I wouldn't read too much into that yet. I wouldn't be ready at 9:30. 01 right on Tuesday to start selling everything. Maybe some people will. It just, without news over the weekend, I really can't say how things will shape up. But a lot of these things are just ran too far too fast. So think about it this way. Think about, well, there could be rotation. So if we're not really going down a lot and you see things kind of generally churning, you might want to look at some sectors that, and if those ones we noted, XLRE, XLF, if they start showing you something, maybe those do start catching up, and that's how they power these latter stages of this rally and keep it levitated. Maybe, just maybe. But I'd be right if I'm along and I see this kind of a slope and this kind of a ramp in something like an XLI or something like the XLY, this kind of insane, just almost every session, just coming for stocks, coming for stocks, coming for stocks, and something gets priced up that quickly, that by that degree, to me, like that's not a great buying opportunity right now. So it's going to be tricky. So the bottom line on the sectors is there's enough left over that if they churn, we can look for those XLEs, those XLFs, those XLPs. We can look at those, maybe XLV, XLRE. You can look at those maybe even to a lesser degree, the XLP, the staples. But otherwise, most of the other things are overbought to one degree or another, with XLK and XLC and XLI being some of the worst offenders that way. Even XTN got up there in its own little sort of on the quieter way. So just be careful and know that there could be a great opportunity, but a lot of us see that. We're all of us out there that are looking at things know where we've gotten to. And in that case, right, it could seem too easy for a reason. Then again, maybe not. So it's always tough when you get something like this and I think the secret, if there is one, is that you get involved with a short leash and you stick with your discipline. If it doesn't work, you get out. That's what you do. I mean, that's because you just can't know for sure what time something's going to crack. Right? Will this be the time it cracks? I don't know. Let me give it a shot. You don't have to go all in on it too. You can go in a partial way and then add to it when it starts working, or you start to see some really bad price action, some really bad market internals during the trading day, some leaders getting absolutely trashed, those kind of things. But anyway, that's the quick look at the 12. Let's see if we can go through a few more, and I'll do this on the larger chart. And I think it might behoove us, since the semis have been the big area, to check out the semis. And this is a 3 standard deviation Bollinger Band. So I believe, let me just double check that before I tell. Yep, there you go, 3 on the upside. So that's extremely stretched right now, right? And that's kind of this is what some people are going to say, you're close enough to call that divergence, where you've got this high here, you've got the slightly higher high, and you've got this similar highs but lower high here in RSI. So negative divergence there is going to be the call by some people. Can't argue with that, but again, don't overstay your welcome as a short. Just be smart about it. Trade against the high if you want to. That's wonderful, but maybe a little bit of a buffer aside from that high, or pick something else that you can work with. But yeah, I would have to say, like, you've got to say, when your RSI, even after having a rough Friday, is at 71, and then your weekly RSI is at 75 after a rough finish on the Friday, that to me is very overbought. And this has been the big area, and we know that a lot of stocks in there are absurd at this point. So this could be the flashpoint to look at. And again, I hate to sound like I'm guaranteeing something's going down. I'm just saying, when something gets this overdone, it's likely, much more likely you'll look back on this and say that was a good area or a good time to sell, rather than this wonderful time to buy. So take that for what it's worth. XHB, right? So the people that can afford somehow to still buy homes are still doing it. I'm planning on keeping this on my radar, because I think this is something, to me, that has a limited shelf life if you go into a recession. So I plan on doing something in here when time presents itself, time permitting on my part, which is I'm very busy all day, so I don't really get a chance to look at these all the time in an ideal way. But to me, again, this thing's 67 on your weekly, 66 on your daily. So you got to be careful on that. 3's really close to the 3rd standard deviation. So again, just be careful. Here's the last time we hit that 3rd standard deviation, back earlier this year. And then here's another time. when you got there, right? So you're kind of trolling along, right, kind of like right up against it. So normally not a good thing, right, when you're this stretched. So just be careful with that one. Let's take a look at a sector that we have had in focus at times and then not, and that's been gold and silver. And just to be thorough about our coverage here on these sectors, and there you go. I wonder where all my indicators are. I guess I'm probably hitting some memory wall or something. But all I can really say is, right, luckily we haven't been bulls in here lately. We were bulls in here earlier in the year. There were some good opportunities. There was also a nice pullback, but not enough yet. I do see this holding above the 200 in purple. This low is higher than this low by a little bit. We'll give it the benefit of the doubt, but really to start feeling better, like this is about to do that, or about to move into a phase like this, right? We need to see this thing start to improve its technical lot. And I think it means you need to see it get through that high at 128. So could be a little bit of a higher low, maybe double bottom in retrospect here, but still premature. So you've got to wait that one out. If this can't hold the 200, right, starts coming back down to here, that's honestly music to my ears or my eyes. But it's I would love for this to get cheaper personally, but I don't see anything great there. Cyclically, I don't see anything great there. So we'll keep an eye on it, but I don't think anything is short. You don't see anything there where it's gotten really rocked and it might be time to think about adding, nor has it put enough together to the upside to say, yeah, there's a nice little trade in here to me that at this current juncture. So on that note, since these are metals, let's take a look at the copper and see what we can come up with here. This has been something we've added the futures really this year to say, well, where is this recovery coming from? And copper did make a solid move, right? Come on. So let's give it that benefit of the doubt now, right? That it's better off. Would you say it's out of the woodwork yet? So out of the woods yet, excuse me. I don't think so. I think you get above this 100, you start talking, some of these highs, you start talking, and I wouldn't rule that out, but you can see that the overall trend of this still, if we draw a line here, right, the overall trend is still down for now. Let's say there's a higher low put in here versus this low, and this was a very strong move after being oversold. So give it that, but we need to see it carry on further. I think if it starts breaking out again, then you could say, yeah, maybe this global economy is showing more, but not quite there yet on that one in my book. Doesn't mean you can't trade it, just mean I don't think for the bigger picture. Oh, right, we've had trouble with the lumber. We'll have to move to those ETFs instead because we're not getting think or swim. And those also responded. So again, I think this has been kind of right, you could see that the commodities went up there, and then you could see that also the other ETF would cut. Those have both done better lately, which is a good sign, right? Let's give them that. Probably the dollar situation is helping this out. And then oil futures. And I think that looks a little bit better there, right? That you're holding these lows and you're getting above the 20 in light blue. And I hate the thinkorswim keeps doing this to me, but it doesn't like something I've got something set up, and it switches me over to percentages on the price axis. But still longer intermediate term, I guess you'd have to say downtrend. You're seeing better action here with maybe a double bottom. You're working your way back above the 20, but you're still really not breaking out in any way. And your long-term SMAs are all still downsloping. So this has its work cut out for it, but at least it moved off the bottom, right? That's the good sign for it. Let's see if I can just put a line across here. I think this line's pretty deep. I don't know why that drew so high there though, but you get the idea. I don't want to belabor that too much since we're not really charting this for to precision for breakouts and all that kind of stuff right now. Let's just do this. Let's do that. It just bothers me. So you're getting close to at least taking that out, But you may as well say, the problem with this kind of a complexion to me is that you've got flat lines waiting for this. So I just kind of put one in there, right, with my cursor. The 50 next after that, the 100, everything's waiting. There's another flat line up here. It's all waiting for it. So it's got its work cut out for it, but maybe it's worth keeping an eye on. If this starts working its way up and I see paper, I'll get it in there, because it could start, again, we just noted that it's one of the sectors that could start to catch up maybe a little bit. So if they start going for that trade, we want to take the trade and go with it. Another thing we've been covering this year due to those developments has been KRE, the regional banking ETF. And this has held its own of late and did try to put a little something together there last week to start out the week, bottomed out, and then started trying to lift, but wasn't able to do much in a strong market. Normally not a good sign, right? Doesn't do very well in a strong market, but it is now back below the 10 in white, but it's above the 20 in light blue and the 50 in gold. So it's got a little something there. I think really probably that losing that 20 and 50 is what you have to keep your eye on. Probably if this thing loses the 50, you'd have to be concerned about it. If it does lose the 50, and it does it relatively soon, because we really can't extrapolate 50 prices too much out into the future quite yet. But you can see that if it were to lose that soon, it would be below that support line I just drew. So that would be a bad development below the 50 there. And I'm just going to mouse over that to see where it is, because I'm back on percentages. And that's at about 41 right now. So yeah, losing 41 is probably where you want to keep an eye on that one if you're thinking about trading that one again. Let's take a look at IYR. We have had some things showing up in here where people do seem to be buying puts. But again, this is at a critical juncture. And so are they buying because they want to go long and they just want protection, which is probably prudent, all things considered right now, or are they legitimate put buyers? So that we'll have to see, right? Taking out Friday's high is probably the unlock. That's probably their immediate unlock that maybe allows for more upside. Otherwise, right, every moving average known to man, all the SMAs that most people follow are just kind of waiting for it. So again, summertime's approaching, and we might have a little bit of, you just never know. I'm not predicting this, but you have to throw it out there that you could have listless behavior for a little while until we get towards earnings, because the next Fed meeting's so far off. Then again, geopolitical, other things could take over, even domestic for all we know. There could be news here, there, everywhere. So let's take a look at some of the bond ETFs. And they're similar, right? That's, what can we say about this? Going nowhere fast, but hey, at least it's above all the SMAs. I don't want to belabor that because I don't really see. Sure, if you take out the high on Thursday, you start seeing it. Maybe there's a rally. We'll see. But here's your other bond. That's, again, these things have just been flatlining. They're not the most exciting traders, but sometimes they do move, and sometimes there's some telling information in there. Could be a double bottom, kind of like cluster lows that we put in the last month's worth of trading. Takes out those SMAs above the 50. Maybe it starts working back up. Could be breaking that intermediate downtrend at that point. So maybe something there to keep an eye on. XBI, we've been charting this one. So we were fortunate a while back to kind of catch the turn on this when it started doing a little more. Didn't fare well right to end the week there. So that's interesting. So that's really backed off. So on this note, your 20-day right there in light blue is probably the big deal, because there's flat lines, there's other things, there's fibs, all kinds of stuff, but that's really where you have the big gap between the moving averages right now. And so that could be where you get a little more whoosh, right, lower if this thing does fall. So percentage wise, 10.4 it's giving me there. And this would be about 5%, it looks like, of a drop that would be it to kind of work its way towards the 50, ballparking it. But the 50 is rising along with the other shorties, and the long terms have stabilized here. So it's maybe not the end of the world just yet. just look at that for an area that could give a little back. We could probably adjust this a little bit now that they've finally added more price action for us. We could probably say that somewhere around there below the 20 is where this is the problem. So if I were using the 20 as a trigger, I would have to let folks know in UOA Pro or some other service, hey, like, be careful because there's trend line support right beneath there. And there's probably flat line support there too, or somewhere just around there. So again, that's the problem I think bears are going to have, unless there's a news driver. In most cases, I wouldn't expect everything just to slice right through. There would have to be something really, I think, worrying people, a lot of players, to just slice right through so much of the support that's now waiting for stocks. And to their credit, like, the bulls ran things through dramatically, but now they've got a lot of upsloping SMAs and other forms of support that were resistance waiting to support this market now that we're above it, and stocks and ETFs above it, blah, blah, blah. But you get the idea, like, there's a lot there now. And again, I think without a big news driver, domestic or international or what have you, you may not just get that instant slice through. So just be careful. Even though I'm tempted myself at this point, just be really careful. So I think the flashpoints are going to be, right, if you start seeing them take profits here in this SMH and some of those XLK names and the mega caps, that might be the sign. If they start to take profits in those things, that might be the sign that, like, look, this thing really did get ahead of itself. If they manage just to let those things generally churn, come off a little bit, and they're buying XLF, XLE, XLV, that kind of stuff, again, XLRE maybe, then you could say, well, they're still positioning, right? This is what we can infer from that. We'd say, well, they still seem to be taking profits, maybe, but they're kind of rotating, it seems, because the expectations are that we still go up from here. So that might be something kind of good to look for. We can pull out of the sector situation stuff that we do each week. Just keep an eye on how those other kind of laggard sectors behave, and how the mega caps and the XLK, the SMH behave. XLC probably should throw that in for good measure. If those are all kind of churning, not doing much, but they're lifting the other ones, it's telling you, I think, that the expectation, at least at that snapshot in time, right, or this near future, is that the market has legs and there's still more rally potential, that maybe they'll use the lowered expectations of the second quarter EPS and then claim they've got these wonderful beats happening. And that just puts us in orbit effectively, right? Which could happen. And that would really set you up, I think, for massive corrective action. Let's say in the second half of August through October could be a pretty dicey window at that point. So we'll see. Don't want to get too far ahead of ourselves. So I hope something to share with you this week in the sector situation or macro measure help you out this week or in some week in the future. I want to thank everyone for tuning in, and also want to wish everyone a wonderful and safe holiday weekend. And again, happy Father's Day to those dads out there. I hope everybody has a great time. Thank you.